And welcome back to Cocktails and Commodities. Joining me as part of the On Air at iMark, or in the On Air at iMark booth. I'm actually not sure what connecting words I should use there. I'm a little dusty today, folks. Please forgive me. Joining me here is Nicholas Boyd-Mathews, who is, allow me to rattle this off, director, founder, owner, CIO, fund manager, or a hedge manager.
Yes, I think Shae and I had probably too many drinks last night. Not at the same function, but bit dishevelled this morning, aren't we?
Yes, but isn't that what a mining conference is for?
It is. It's been great.
Yeah, it's been great. Now I do need to say the company that you are from. I did rattle off your many titles. You are from Eden Asset Management.
Correct, Eden Asset Management.
Thank you very much for being here. Now, I got to meet you yesterday, and I loved your energy that you brought to the stage. We hosted a panel talking about the changing investor profile, or I hosted the panel, you participated.
Indeed.
I'm actually going to kick off today's podcast with one of the questions I asked you yesterday, because I actually think it's a great answer and more people should know. ETFs. I'm really frustrated with ETFs because I do think they suck a lot of money out of the market, and they encourage young investors to start investing, which is great, but sometimes they don't really take the next step out. So tell me, are ETFs a gateway drug to the market, or does it create lazy investing?
I think a bit of both, really, if you put it like that. It is a lazy way of investing because you're effectively putting money into a basket of shares that are designed to meet a certain sector or asset class, whether that's growth, income, or whether it's the banking sector or commodity sector. So it makes life very easy for you. That basket of shares has been chosen by a fund manager, somebody like myself, and often there'll be a passive investment, which is sort of like an index tracker. I actually do, or will be doing, I should say, an ETF later next year due to demand. And what we've seen with ETFs are an interest in active fund managers. So rather than a passive ETF, we've got active fund managers that aim to outperform an index or a particular market or benchmark or hurdle rate. And what I do is natural resources. So I invest in global natural resources around the world as a specialist alternative fund manager that's active, but I'm uncorrelated to any particular index. Therefore, that makes me attractive as an absolute return fund manager. So there's been a trend that's moved towards investment into these active ETFs, and we hope to launch one, I think, next year, hopefully. So I like them because I'm biased. Quite simply, we're launching one, so I can't say anything bad about them, really, can I? Given we're launching one, they are cheap though, and that's the good thing about them. If you're investing in an ETF, it's the actual management fees are way less than investing in, say, a traditional fund like myself. There is typically no PRF, performance-related fee, but there can be. So as an early investor, it's a cheap way and a cheap, quick, easy way without selecting a basket full of stocks to get diversity into a particular index or sector. So I'm for them. I'll vote for them.
On that, do you find that young people are using ETFs as an entry into the market?
Well, my background generally is institutional, and we generally get fund of funds that invest in us, family offices, non-for-profit, that sort of thing. But I can tell you from my experience that, yes, I think young people are looking at ETFs. Mainly because of the liquidity as well, which I didn't touch on earlier, is that they are managed by or listed on an exchange, and that could be an exchange around the world, whether it's London, Frankfurt, or wherever it is, and that gives it a lot of liquidity, which is quite important because obviously if you want to get out of a position, you're going to need somebody to sell, as opposed to a traditional fund where you have to put a redemption notice in. It's a lot of paperwork, you post it off, you wait a couple of weeks, all that sort of stuff, whereas ETFs are very simple to trade and very liquid. So yes, young people are definitely, I think, embracing that market.
Okay, I might have to change my bias and stop being anti-ETFs. Moving forward, again, I'm going to touch on something that I threw out at the panel yesterday because you've got a really good answer that you gave me in a text message later on. So at the start of the pandemic, it turns out Australia had 1 million new investors. People who had never bought shares before were suddenly buying shares. That's a huge influx of people to start investing. And it turns out 50% of them were women, or just shy. We're talking like 48, 49. Tell me, is that the start of a new trend of female investors, or do you think this was a one-off blip because of the pandemic?
Well, first and foremost, I hope it is a trend, and a trend that's positive and upwards.
Me too.
And I've got a very strong opinions on female fund managers and women in finance. I am linked in with a number of the 100 Women in Finance around the world, which is an organisation that promotes women in the workplace and in the finance industry, and I'm very much in support of that. I also work for a charity called White Ribbon Australia, which educates young men, schoolboys, and how to be respectful towards women. So this subject, on women in finance, does interest me. And Eden, we certainly, we do back this sort of this market in terms of we want to see more women in the finance industry. And to sort of put some numbers together on that, there's probably about 14% female fund managers. Now that's not representation of the numbers you just gave a moment ago, is it? Anywhere near?
No, not even close.
No. So the question is why? Why is there only 14%? And the other interesting fact is they're actually really good at the job. So in a world that's obsessed with numbers and quants and multiples, Sharpe ratios, Sorrentos, alpha, beta, you name it, why the hell don't we have more female fund managers? So it was a question that I raised many years ago when I actually worked with somebody in the industry who was a fund manager, and we tended to know, and we touched on this earlier, didn't we, Shae? I could ask a question in a meeting and everybody would listen up and take note, and if I gave that question to her to ask at the meeting, it wasn't received in the same way. Let's put it that way. I also found that the pay difference was huge. I don't know if you have any experience of this yourself as being a female in your industry, but
I certainly do, actually. It's a sore point of mine.
Because it seems to be across most industries, so
Yes.
I'm probably just talking about finance here. But in finance, it's vastly different. So you've got 14% of females working as a fund manager who are providing what we call alpha returns, which is substantial. They're achieving alpha, they've got good numbers, they're risk-adjusted returns, which is key here. Risk-adjusted returns is what we go for in our business. And that means we're taking the least amount of risk with the money that we have to get the maximum gain. And that's important. That's not stock picking, that's not gambling, that's not speculating. This is proper investing. Females are better than men at doing it, simply. They manage the money with less risk. They invest for longer periods of time, as opposed to men tend to be shorter. They don't trade. They are generally, on all fronts that you can name, and I could go through a list of them if you want, they perform better than men. So if I had to work or have my money managed by anybody, that would be my first choice on the list, of a tick list, if you know.
So why aren't women well represented in finance? Because tapping back into my experience as an equity analyst, it was no one looked like me in the room. And it was something that I experienced everywhere I went. Like people here at IMARC, and there is a strong female presence here, and it's really good to see. But why aren't we seeing more women come into finance roles? Because they're at the junior level. So
Yes.
What's stopping them from getting up higher?
Well, let's be honest, Shae, there's no one that looks like you. Even the women. So, be fair.
You're making me
On
blush.
the podcast, for those who can't see, believe me.
And I'm so dusty today as well.
It is a bit of a struggle, isn't it? Sorry, what was the question again? I missed that.
Why aren't women getting into these positions? Why, is there a bias in hiring? Look, full confession here. I am a single mum. I understand what the pressures are of home and family life and balancing your work life.
Yep.
So I do understand that. But is there a bias against hiring women in this industry? Like, you've got a front row seat to this, and you're an advocate for it too.
Absolutely. And I'm a single dad, by the way.
Oh, are you?
She just mentioned that. My son, 15 years old, Oliver, getting interesting girls, actually, funny enough. Yeah, I'll have to educate him on. Why is there not enough? I don't know. I don't have the answer to that. I assume it's tradition. I assume it's from long-standing, that the man has always been the breadwinner, which is absolutely absurd. We're in a what year are we? What generation are we now?
We're up to Alpha. My kids are Alpha.
Alpha, is it?
Alpha
I
generation.
don't even know what I was, X, Y, G, or whatever it is. But you would think by now that this would be accepted and normal. That when people go in look for a job, that it's purely on the merits of their ability, not on if they're wearing a skirt or a pair of trousers. I think that's the simple choice. I mean, I don't know why the answer is that we can't get more women on equal pay and in the industry, in all industries it appears. I don't have the answer. Simple as that. But if you do, or anybody out there does, please tell me.
Oh, please actually respond to the podcast and come on in and we'll talk about it. Now, moving forward, I do want to talk about, you're nominated for an award here at IMARC, which is why you've made the trip out. Sounds like you're a little hard to drag out of Perth.
Very much so. I'm a country boy. I grew up on an orchard with a well and I rode horses, and my sister still does. And so it's very hard to get me to a city. The award is actually taking place on the 30th of November, and I say award, I mean I'm nominated.
You're nominated.
I think you said nominated.
Is it November?
November the 30th.
Oh, November
in
the
London, IMARC event. And I have been asked to fly over, so we're taking that as a hint, but we don't know. I mean, there are some good nominations up there. have all done good things. So I'm flying over on the 25th of November. I'm in London for Christmas as well. Haven't seen my family for crikey years, since before COVID, so they're excited. So big family gathering back up in sort of they've moved to Wales now in the countryside. I'm originally from Worcestershire. So back to the fields, back to riding horses.
Back to the well.
Back to the well if it's still there. Apparently I fell down that well when I was a young kid, but I can't remember. So you never know. So maybe it's bricked up by now. But the award is quite special. To be nominated for an award that is ESG Initiative of the Year, particularly when we sort of found out that we are the only ESG light green Article 8 SFDR approved natural resources UCITS fund, which we actually got our classification on the 9th of March in 2021. And it came into force in 10th of March 2021. So the day before it came in, so we've been doing it since it came out. We did run the actual fund that I managed from as a UCITS 3, which was the first ever regulated hedge fund back in 2005. We ran that strategy on natural resources last year with some friends and family. That proved to be successful and came in as the #1 ranked fund manager in natural resources. So that gave us the confidence that we could do it in an ESG format. The only difference between that fund strategy and now is I don't invest in fossil fuels. So I don't invest in coal, oil and gas, anything that's bad, that sort of thing. And obviously we've taken on this gender diversity, as a point of difference that we promote, which includes people like women in the workplace, industry, and that sort of thing. And I'm involved in charities as well, which at my age is new to me. I've been doing it for about 2 years. Used to do a lot of training with FINCIA, a mentoring program, which I did for about 10 years. Because I do love lecturing on things in the industry, but I've given that up more recently, so I'm sort of doing a bit of charity work. I have to say, one thing that I've mentioned this a few times actually, it's probably getting a bit boring now, but when I first started in the industry, I was at Morgan Stanley as an analyst. This is over 30 years ago, and I remember the investment director saying to me at the time, don't ever mix ethics with investment. And we used to invest in tobacco companies in those days, progressive dividend policy, free cash flow, lots of money. And 30 odd years on, it's gone full circle, and now we're being responsible citizens, and we're investing in only things that are good for the environment, good for the climate, but more importantly, social and governance is being taken on board as well. Mining in Australia, to be honest with you, has been very good on the environment. I know that Adam Matthews from the Church of England, who I am a big fan of, he speaks out quite regularly about mining and what they've been doing to the climate and the planet is quite bad. And I do agree with him. I think that is right. But I also would think that mining is quite important in terms of critical minerals in helping to solve the problem of climate change. And I think a redirection of money, particularly people like myself who have access to funding, to have a responsibility to invest that money into mining companies that take on board a roadmap or a plan to actually become sustainable. Because let's be honest, they're not sustainable at the moment.
No.
So it's not like we can go out there and say, right, we'll pick that company or that company. That just simply won't happen. What we do at Eden, which is very different, is, and that's I assume why we've been nominated for this award, is that we've come up with the initiative to say, right, on the E, the S and the G, on the environment side, the social and the governance, there are codings from Europe. We've taken those codings, and what we've done is we've applied that to companies that we look to invest in, and then map out where they are. Map where they are currently, and then map out where they should be in the next few years. If those companies then adopt that roadmap, and with a genuine intent to become sustainable, not all of them do. Some of them use it as a bit of paper to wave around,
with the fancy green colouring on there.
Absolutely.
How else? How do you know your ESG?
Oh yeah, which isn't true, guys. For readers out there, don't believe what you read. But if the companies that do adopt that roadmap, then we will invest in them. We also provide training through a third-party company called Parve ESG that actually takes on board that as well. They do roadmaps similar to us, but they're not ESG European standard. We've got that side of things. So we do have partners that we can refer, and that doesn't have to be mining companies. It can be any company. But obviously my focus is ones that qualify under Europe, under SFDR, ESG, light green, Article 8. It's a mouthful, isn't it?
It is. It's a lot. I actually don't even know where to start with.
I hope they actually shorten it to something and then some acronym with them. But and I will explain what the difference is on those in a moment. But we're hopeful that a lot of the companies and the ones that we've seen so far Most of them have embraced it. Most of them are pleased to actually do a roadmap and give us some guidance. There are other firms out there that provide this service, so we don't mind if they use a third party, provider, as long as these companies take on the initiative to become sustainable in some format in all of the different codes, E, S and G, then we are comfortable to invest in them, and we think that's the way the market should go. I probably should touch on, do you understand light green Article 8 and Article 9?
I actually don't. So I was going to go there. You mentioned it earlier, and I made a note down here, and I have no idea what light green Article 8 is. So we'll start with that now, because I've got a follow-up question for you.
Okay, and I do get, whenever I mention this, I ask that because most people look at me completely blank and say, what the hell is that?
But to be fair, a lot of ESG stuff is still very mysterious, but we know we've got to do it or got to have it, but nobody knows what it is, so please.
Absolutely. On that panel, actually, everybody voted on that question, didn't they? I don't know if I'm going to ruin your question now, but everybody said ESG is here and it's coming and it's to stay.
Yeah.
Remember, and I think that is a general trend. But getting back to the actual classifications, there are a few, but I'll just focus on two of them at the moment, if I may. There's light green Article 8, and there's dark green Article 9. And those are the two that are probably most relevant to us in terms of sustainability.
Are these terms actually meaningful? Like, do they say what they are?
They do.
Okay, all right, I'll let you explain.
There's probably a 100-page or 1,000-page document that we can refer to if you wish. But it's a European standard that's come out. It's called SFDR for short. Now, light green and dark green, I compare them as vegetarian and vegan.
Okay.
To make it as dumbed down and simple as possible. As in, dark green Article 9 is your vegan. So the only way you can invest in companies is if it's true and it's got a rating.
Yeah.
And that rating is being given by a ratings agency, and that can be Morningstar, Sustainability, all those sort of companies, Bloomberg, Morgan Stanley. There's loads of them out there. The only problem with that is that the companies that do have a rating, all these rating agencies actually put such a wide range on them that they're not really succinct in that you can get a good judgment as whether it's green or not, whether it's sustainable. So it is evolving and it is changing. That's the dark green side. Light green is where we're vegetarian, as I said, and that means we can have a bit of meat and fish, without food, so to speak. So what we do as a light green is we are committed to up to 80% of the portfolio that we manage, so our stable, our universe of investments, is actually doing a roadmap, is becoming sustainable, which is those roadmaps we mentioned earlier. So that to me is important. It is an intent though, but you're absolutely spot on. It's actually changing all the time. It's evolving ESG, and it will continue to evolve. And so this time next year there'll be something else, and something else the year after, and something else after that, and we'll have to adopt some change until someone finds the correct solution. And no one has the answer yet. But we're getting there. That's the main thing. We're getting there.
I think I stole this from Roger, the other guy on the panelist, but it's safety. You know, this is evolving from we used to laugh at companies that insisted wearing a high-vis vest and steel cap boots, but now it's a given. You cannot get into a mine site or any workplace, any physical workplace without this safety wear. So that's very much where the ESG trend's going.
You're right. And
it's not a trend. That was a bad way of I shouldn't use that word. It's not a trend.
It must be time for a drink again, I think.
I like your spirit.
OH&S, remember that?
Oh,
Occupational Health and Safety.
Yes.
There used to be a big laminated bit of plastic with some writing on in the kitchen somewhere in the office or wherever it was.
How to bend and pick up a box.
Yeah, that's right.
Yep.
Yes, and we had to all that nonsense. I mean, that was sort of laughed at, but that's evolved into where we are today, I suppose.
It is, and look, I laughed at OH&S when it first came out. I remember as it was becoming a thing. I actually travel with in my podcast, I have a bright orange gaffer tape.
Right.
So that way, because of OH&S policies at most places, if I've got to tape something down, you need to actually know that there's tape on the ground, that there's something there. So that's just how ingrained it is, and that's very much where this ESG is going.
Yes.
It's going to be that level where we're just so used to it's normal in what we're doing every day, and our investing
almost like breathing air.
Yeah.
Yeah, and not quite like the drinks we had last night. But it's that sort of thing, isn't it, really? No, I think I'm embracing it. I think it's good. And it's nice. It's nice after all these years in the industry. I'm old. I'm old, I can tell you that. I feel old as well. But it's nice to be able to embrace and do something that, is good for the economy, or good for the climate, or good for the world, being a responsible citizen. And not only that, including everybody.
Yep.
Not just sort of, I'm a white male. I won't say my age, but I'm nearly 50. And I mean,
we're in the same decade, buddy.
Well, you look a lot better for it, I can assure you, than me. I've probably lived a hard life compared to you. No, I haven't. Really. No, I don't think I have really.
I think we'll have to swap some off-air stories.
Yes, we probably will. We'll save that for another time, I think. But it's just nice to see that the world is doing this in my lifetime, and I hope it continues.
Do you know, it's funny because the cynic in me, when people talk about no, we don't invest in fossil fuels, or we're doing these gender diversity quotas or whatever it is, the cynic in me is like, are you doing that because you believe it, or are you doing it because that's where the market is and you're being forced to meet it?
I could say personally for me, and I'm very honest about this, I'm doing it because I'm intrigued and interested and I want to do it. And when it first came out, I probably thought, oh, here we go. Here's another way of, we've got to tick a box to be able to invest in something, which isn't going to happen or change the world or do anything. But it has, and it is, and I can see this being something that is good for everybody. So no, I'm generally in favour of it. I believe in it. And I want it to happen. But I will answer that with a second part, which I think you're probably alluding to more. Yes, there are a lot of people out there that are just literally using this.
Yes.
As we're green. Yeah. Look, we're green, we're ESG, and they put, I think the word is greenwashing. Are we allowed to say that?
Yeah, we're greenwashing, yeah.
Are we allowed to say, because greenwashing, it is, there's a lot of it. It saddens me, actually. Because in an industry that I started years ago was self-regulated, that's now regulated because it can't self-regulate, can actually come out and put statements.
Took a minute for the penny to drop.
Come out and put statements that they are ESG just to mislead people to get money in. And it's not just small firms.
No.
We're talking DWS. I mean, Deutsche's asset management arm in Europe, billions of money under management, and yet they've been told off because they've been misrepresenting themselves as being ESG. I mean, that's a huge industry. That actually, if Deutsche can get these things wrong, and they're in Europe, they invented it, I mean, for Christ's sake, we haven't got it out here yet. I mean, what's the world coming to? That is just so, and the fines. Again, they were poor. The fines were poor. Yeah, nothing to them at the end of the day, so it is bad. Sorry to interrupt there.
No, that's okay. Actually, great story. I do love it. But it's the reason why it adds to people's cynicism in general. It's like, well, what is it? If something like Deutsche can get away with it, they got caught. If they're doing this, that it gives people reason to be susceptible of what other companies are doing just because they're claiming it.
Absolutely.
It breeds mistrust. That was the short version of what I was trying to say.
DWS Group, their asset management arm, billions and billions of assets under management, and if they can get it wrong, then absolutely, everybody can get it wrong and can get away with it. In Australia, there seems to be a bit more policing of it. I mean, it's all well and good, ASIC having the powers to do things. They've got to have the ability and the manpower to do it. And dare I say manpower? I should have said, people power. Probably why there's a problem with that sort of thing. But anyway, I do believe in ESG. I do believe that we are heading the right way. Are we there? No. Are we getting there? Slowly. Does anybody have the right answer? Probably not. But I'm sure over time we will. Probably not in our lifetime that it'll be perfect, but it'll be getting there.
We'll get there slowly. Yeah. All right, now we're going to need to draw this podcast to a close in 2 questions. First and foremost, as you've kindly mentioned, you've been kicking around the industry for a long time.
Thank you.
In what you do, I mean it as a compliment, I promise.
34 years.
I could have been like, well, you're an old timer. There was, there's other ways of phrasing it. In your experience, what do you think the industry drastically needs to change right now? What does it need most?
In terms of, is that a very broad question?
It was a very broad question, and you know what? If I didn't drink so much, I'd have my big girl pants on and remember all my big girl words. Basically, what is the industry lacking? Let's look at investment funds. Like, you're moving into ETFs, but what is? Do you think you need more women in there? Do you think ESG needs to be improved? Do you think regulation?
All of those and the above. Get the tick. You're on the money there, so to speak. Definitely, there needs to be a change in the boardrooms, and I think there was a good panelist we had yesterday that you hosted. I thought that was very good, and in fact, was it the Australian Association?
Rachel Waterhouse. Yeah,
Rachel. I thought she had a lot to say. It was very interesting.
She was great.
And I did take notes, and she has been in contact with me since then, so I must get back to her because she's got some interesting stats on investment and that. So I think she would be good to answer these questions. But then again, all the panel were quite useful. I thought were very good. But then again, do you remember the comment about? I thought your question about time investment time horizon.
Yes.
What's long term, what's short term, and what's medium?
Yeah.
Now that I thought was a great question. Reason being, in Australia and in Perth, where I'm based now, long term is
I
about
like
a
how
week.
you separated Perth from Australia.
Yeah.
And just so you know, that's how the rest of Australia feels about Perth.
Absolutely. We want a wall down the middle. We're going to change our flag in Western Australia, and we're not going to let anybody in.
West Australian land.
The most isolated state in the world. You
Yep.
know, we like it that way. Stay out, please. No, it's a great place. Come and visit, honestly. Great beaches. I mean, I live by the beach. It's wonderful. But anyway.
The time view.
Yeah, the time view. Absolutely. In Western Australia, there is a lot of speculation. Playing the pokey, so to speak.
Mm-hmm.
Gamblers that will consider long term about a week. But for investment purposes, I think one of the guys on the panel said 3 years.
Yes, that was a long-term view in his opinion. Yeah,
which I found ridiculous because 3 years is very short term to me.
Yes.
And that was something I disagree with. To me, I go back to my days in London. Gilts had timeframes on them where you had your shorts, mediums, and longs, and I would use those as a definition for time horizon. So you're talking more than 10 years for long-term investment, and you're talking medium, probably 5 years, 5 to 7, and you're talking short-term, 1 to 3 years.
Okay.
So completely different. So I thought it was a great question. And I think everybody answered it slightly differently.
Everybody had a different opinion on what long-term was.
So my opinion may be different from everybody else's.
It was fascinating, and part of the reason why I asked it is mining's a long-term business.
Absolutely.
The average mine takes 15 years from discovery to first production.
Yep.
It's a long time frame. So to have a long-term view and then hear somebody say 3 years, it's like, mate, it takes.
It hasn't even got off the ground.
It can take 3 years to build a plant.
Yeah, it's already spent it's dropped a few holes down the ground and still doing the geology on it to firm it up. It's not even near bankable or feasibility study, pre-feasibility even.
Actually, sometimes they could take 3 years themselves.
And most of them spend a lot of the money on flying around having lunches all the time and doing podcasts like this, without actually putting any holes down the ground. But you're absolutely right. It's a mine life. It used to be about 8 years many years ago. We could have a whole conversation about this as well, about the mining industry and how
I might be demanding a follow-up after this. This has
been
super
great.
Cycle,
yeah. The last super cycle I remember that was a proper super cycle was up to the Beijing Olympics, and I was here for that and did very well with the fund I managed. But we are in a different environment now with electrification. This is going to be a wonderful super cycle, I think. It's got a more legs. Most of the commodities are doing well. There is talk of recession. I mean, you're right. It's probably another time for this conversation, really, because there's too much to talk about to go into that. But I'm generally quite positive on mining, and I think as a time horizon, because of the supply-demand fundamentals, and there has been a lack of investment in exploration for years. I think that we'll see a lot of mines have to come online, and that's going to be a lot of capital, and I mean a lot of capital going into mining, which, as you just said, will take 15 years.
Yeah,
15 years minimum if you're lucky to get into production. And I always find it funny when I see exploration companies and they talk about the commodity price of today and say, look at the commodity price today. This is a reason to invest in my exploration company. Well, when are you going to produce, and what will the commodity price be in 15 years' time? If you can tell me that, then we can talk.
Yep.
But please don't quote the commodity price now, because it's currently irrelevant to me. Honestly.
It is, and there's when gold's hot or lithium's hot, it's like, oh, we've got some of that, and it's like, so by the time you get it out of the ground, that won't matter.
It could be the worst commodity in the world, couldn't it? Let's be honest about this. So there is a lot of hot talk and a lot of rubbish. Again, for another time, I know we're sort of coming to a wrap, aren't we? So
we're meant to.
Yes.
Yeah. It sounds like you and I could actually just carry this on to the pub later tonight and have a grand old time.
The rest of the week, actually. I hope mine's not flying back to Perth, actually. And you can tell, guys, I don't get out much, do I?
No. All right, we do need to wrap this up because I have somebody coming in about 20 minutes.
Right.
But before you leave, now I know you're a little worse for wear now, I certainly am, but if we are at the bar later tonight,
yes,
what cocktail would I be buying you?
Oh, I'm a bit of a girl, Manhattan.
Really?
Yeah, I know from Sex and the City.
Yes.
Carrie Bradshaw.
Did that influence you?
Oh, yes. We were actually in the Ozone bar in Hong Kong at Mines and Money a few years ago.
Yeah.
And there was 8 or 9 of us, and we were all drinking, those cocktails. It was quite funny, and we were all absolutely sozzled after about 5 minutes. It really was. Right up there. I think it was the air as well, but it was a great time. No, I do like that cocktail, I'm afraid.
No, that is absolutely fun. It's just another one to add to my list.
Might have one later.
Yes. Do you know what? Right now, it's like absolutely not. But I reckon I can be quite. I can be persuaded in an hour.
All right, I'll twist your arm.
Look,
Thank you
Nick,
very much. It's been a pleasure to be on here today.
Oh, Nick, this has been a ridiculous amount of fun. Nobody should have this much fun in their full-time job. So thank you very much. And I really hope we get to chat. Maybe we'll do something over Zoom in a few months after you may or may not have won this award.
Okay, thank you very much indeed. Pleasure
Thanks,
to be
Nick.
here. Thank you.
Bye.